Hello from All Bookkeeping and Taxes. Today, we'll dive into income statements, also called profit and loss statements. In this video, we'll cover what an income statement is, its significance, and how to read one. And we'll also examine real-world examples to understand what insights you can gain by analyzing it.
An income statement is a financial document highlighting your business's profitability over a specific time frame, like a month or a year. It provides a breakdown of your revenue minus expenses and can reveal if your business is overspending or not earning enough to stay profitable. It's one of the three core financial statements and is incredibly useful for understanding your business's performance. Additionally, if you're seeking a loan or attracting investors, they'll want to see your income statement to verify your profitability. They won't just take your word for it. Here's an example of what an income statement looks like. Let's walk through each section so you can learn how to interpret one for yourself. 1. Sales revenue. This reflects how much income Coffee Roaster Enterprises made from selling products like coffee and pastries in 2019. You can break this down further by product to pinpoint exactly which items bring in the most revenue. 2. Cost of goods sold (COGS). This is the total cost incurred to produce and deliver the products or services sold. For coffee roasters, this includes costs like raw coffee beans, employee wages, and packaging materials. Indirect expenses like rent or utility bills are excluded from COGS. 3. Gross profit. Gross profit is what's left after subtracting COGS from total revenue. It gives a rough measure of your business's efficiency before factoring in overhead expenses. 4. General expenses, operating expenses. These cover costs such as rent, equipment, marketing, advertising, bank fees, and other operational expenses necessary to keep the business running. 5. Operating earnings. Sometimes called operating profit or income, this shows your profitability after accounting for all internal costs, which you have more control over, but before external costs like taxes or loan interest payments. 6. Interest expense. If your business has debt, this section summarizes the total interest payments made during the reporting period. 7. Earnings before income tax. This figure represents the business's profitability before taxes are deducted. 8. Income tax expense. This indicates how much you paid in income taxes to the government. 9. Net profit. Often called the bottom line. This is your business's final profit after all costs and taxes are deducted. What can we learn from an income statement? A lot. You can see how much revenue the business generates, how much it spends, how efficient it is, and identify areas of overspending. Take Coffee Roaster Enterprises, for example. They only earned $7,000 in profit for the entire year, which suggests the owner isn't earning much from the business. That's an issue. They brought in just $57,000 in total revenue, meaning they might need to double their sales to support themselves properly. Additionally, they only spent $500 on marketing. If they want to attract more customers and grow revenue, it might be wise to reinvest their profits in advertising, like running Facebook ads or distributing flyers locally. Another red flag. They're paying a significant amount in interest, likely due to a business loan or credit card debt. This is one of their largest expenses after rent and taxes. To cut down on these costs, they might consider consolidating their debt with a lower interest loan or allocating profits toward paying off high-interest debt before increasing marketing spending. How do you create an income statement? You'll need bookkeeping to produce an income statement. Bookkeeping involves recording and categorizing all your financial transactions. Once your books are organized, you can summarize them into an income statement. If you're not keeping up with your bookkeeping, check out our Bookkeeping Basics video for a quick guide. If you're on top of your books, you've got two options for creating income statements. 1. Use an Excel template. You can use a simple income statement template like the one our expert team at All Bookkeeping and Taxes designed. It's user-friendly. Just input your transactions and automatically generate an income statement. You can download it through the link in the description. 2. Use accounting software. If you're comfortable with accounting tools, most of them allow you to generate income statements with just a few clicks. If bookkeeping isn't your thing, we've got you covered. At All Bookkeeping and Taxes, we provide affordable and reliable financial services that let you focus on your passion, not your paperwork. We've helped small business owners manage their books, and we'd love to help you too, so you can focus on growing your business. That's it from us at All Bookkeeping and Taxes. Wishing you all the best on your entrepreneurial journey. Happy bookkeeping!